Welcome to the Forex, and here we're looking at the US dollar. Yesterday we were looking at this as being an A and a B and a C correction here, and possibly moving a bit higher into here, and the 61.8 retracement level was at sort of 80.20 in here. The main point here is that the A wave here is quite nice and sort of clean. The C wave here is not that clean. I can count 5 waves from here to here, so I'm unsure about what the rest of this is here as such. It's just not that sort of clean. The market, has moved down since yesterday from that resistance point here. But as I mentioned yesterday as well, is that over this week is that the 79.72 here needs to be breached as the resistance point here. That would confirm that pretty much we're going to be getting overlapping wave structures from point B here. The other trigger for weakness was this point here that we were looking at yesterday as well. So this 87 here. A breaching of this creates weakness, but it doesn't confirm the whole downtrend as such. We need that 79.72 there to do that. So look, this point, from this point here to this point here, acts as a corrective because it's in 3 waves here. So it can move up and make new highs here. Yes, it can move down, to really confirm that this is corrective at this point here. It would need to take this high out here, but that's pretty close to the high anyway, so that's a bit sort of bit useless really. So look, still a rock here at 80 and a hard place here at subgroup 2 here. So we just really need to allow this to unfold, and it's not really that much clearer on this is overbought on the daily, so there is pressure there for that, but the euro is not really giving us much sort of clear patterns either. Like we were looking at this being wave 1 here, and that's fine, and the A wave and the B wave and the C wave, and as I mentioned here, the C wave here is pretty damn messy, and but we would be considering being bullish above the 138 as support, and it's done that. And then what we were looking for to trigger trades were support really on, let's just trip in here for a moment, the support on top of group 1, so 138.30, so the 30 is the top of group 1 here, and it's tried to get support here. It's moved up, and the breakout's important, but the retest is more important, and it hasn't found that support yet, and that's what you're looking for to confirm the trade to the upside, because this move up through here really is in 3 waves. It's corrective as well. Yes, it can develop into 5 waves, and the euro's got a bit of a habit of starting a trend like this as well, in terms of having all these sort of sharp 1s and 2s as such before it actually builds up into a trend. So that could be that could be the case, but that 30 there, 138.30 as a retested support is the trigger for that move to the upside here. So that's what you're looking for today, or not. If it moves down, well then that it's got further to move down because it's corrective. But once again, on the daily, this market is reasonably oversold, so it's due to come up, and it can do it from now. So look for support on 20 and especially the 30 there. The Australian dollar against the US has moved lower, and just looking at the bigger picture here on the daily, our main count is that the wave 3 is in place. We're looking for wave 4 to come back at 92.50 is the 38.2 retracement level, or the 4th wave here of 1 lesser degree at 92. So this move down here so far is in 3 waves, 5 waves down from the top, counter trend, which we're looking back to 94. Didn't quite get to 94, but got reasonably close to it here. As such, I thought it would have been larger because this structure down here that we're counting down in 5 waves here, is quite large to have such a small retracement level here. The other thing too, is that we're looking for 92.50 as the 38.2 retracement level. Not quite there, but it does appear that we've got 5 waves down here to make from wave B down to wave C. I know it happened very quickly, after wave A had all these sessions here, but it does, in its odd way, count as an A wave, a B wave, and a C wave here to be completed. So, if that was the case, then we would be moving, up from here. But we would need to see, an impulse wave like this here. I mean, that's a motive wave with the whole correctional pattern built into it. But we need to see that clear 5-wave structure there. If we see a corrective wave pulling into here in 3 waves to here, then we know that we're corrective and we'll be moving down further, because this is not the this is more of this sort of price action here is the personality of a third wave, not a C wave here. So we could get a larger pattern to the downside, even though we've got this A, B, and C here. That needs to be confirmed with a certain impulse wave to the upside. But as it stands, this market can still slide lower as well. So we just need to be mindful of what's occurring in here as such. So things to look out for, I guess, are the retracement level from this high to here. So this 50-60% retracement level in this zone here. So we could also say too that that's at 93.20 and 93.30 here. So developing support on 93.30 gives us like the bullish pattern from that point, and that's where we would go long from. So either support on 93.30 or a very clear 5-wave structure to the upside here in terms of the 1, the 2, 3, the 4, and the 5 to here. Because if we just get 3 to here, say, and this one to here, like a clean 3 waves here, then it's likely that this is corrective at that point. So we need to monitor that there. You need to count. If you get 5 here, then you'll get another 5 over here. And by that time, in the second lot of 5, if you've got support on 93.30, top of group 1, then you know that this is wave C here of wave 4, larger wave 4, and we're moving up from there. Right, the Euro Australian. I think that wave 4 is in place. This is the weekly. You know that I've been searching for it, and realistically, we wouldn't call it in confirmed until we had the 150 there, the medium level 1.5 here as the support. But this is the larger wave count here, and if that is wave 4 here, we'd be looking for wave 5 to take out this high here. So anywhere up in this area here would be fine, and counting 5 waves up there. Normally the 5th wave here is normally the same size as wave 1 here. If it's going to extend, well then, the 5th wave. The 5th wave can also be roughly 61.8% of the 3rd wave here. So the same thing once here again as well. So we could get a reasonable move up through here. But just drilling into this and looking at the cons and pros of it. So just on the smaller daily version here is that we do have a move up here, but it's only in 3 waves. It's not in 5 waves. So it certainly can be corrective, and it could pull back to the wave 4 of 1 lesser degree here and then roll over. It's possible. I've just got it labeled as wave 5 here, but you can see here it's not showing me an impulsive wave in terms of 5 waves, like 1, 2, 3, 4, and 5. So wave 4 here not overlapping the top of wave 1 here. That's what makes it impulsive. But here, if I counted this as 1, 2, 3, 4, and 5 here, it just doesn't count because this is overlapping this structure here. Just moving on to the euro yen here, we were looking at the 50-60% retracement level at 142, and that's sort of in play now. We've seen a bit of a sell-off from here. We're looking at being long from 141.72 to 142 yesterday. So it's possible that wave B here is completed in terms of an A wave, a B wave, and a C wave for wave B coming back to the 61.8 retracement level. If that's the case, then we'll see wave C move down through here. So we have seen a sharp move down through here, and we'll look for a 61.8 retracement level back into this area through here. We know that the market's overbought at the 142 area, so there is that sort of weight on it now to move down in 5 waves back into the 140 area, if not lower. So the move down from the high here is not in a very clean 5 waves. A bit odd really, isn't it? But you got 1, 2, 3, typical 4th wave and 5th wave here. So pulling back up into this area through here, we understand that all of this here is the supply sort of area. So this running back up into here is where it's going to find resistance. That said, this move here appears to be in 5 waves, so we'd be looking at this in terms of up for 1 here, back for 2 here, all of this being the 3rd, the 4th here, and the 5th, then an A and a B and a C, and then another 5 up through to here. So if you see a resistance up in this area through here, then a move back below here, then support on 72 here, then that would be the point of entry to the long side. Okay, so just keep an eye on that, but the bias is lower. Right. The pound yen, yesterday we were, in a bit of a nutshell, we were counting 5 waves completing up into the 172.72 area through here. We know that 272 and 772 play a strong role, and we can see that there. This market is also working across the 172 here. So the move down through here, even though it appears impulsive, it's actually at this stage it looks corrective, because from this high here we've got this move down through here, which can be sort of the A wave, the B wave, and then we've got 1, 2, 3, 4, 5 here. So it's basically an A and a B and a C. It's just that it's moved really swiftly, and this has been across the board really. So, but it does count as corrective, and I think that's interesting. The 61.8 retracement level is back up here at 172.20, so that's where you'll find resistance. This move up here also appears to be impulsive as well, just like I pointed out in the other one. So up for 1 to here, back for 2 to here. We can have the 3rd and the 4th into here, but I think this is still going up through here. So basically what we want to see here is, and once this is completed into the 172.20 area, we want to see a corrective move here. After the corrective move, if you can find support here on 72, we'll then go long and look to add on top of 172.30 as well, if that's the case at this point here. So you've got to be mindful that it doesn't just fade out from here, but if you do see an A and a B and a C where it trades back below 172, then find support, then you know you've got something to the long side. But a clean 5 waves here will give you another clean 5 waves over here. That could also move further as well. But just be mindful all the time, as I find this is just when trends are starting. I always find that the beginning of the trend here normally makes a really nice sort of trend line or resistance line here, if you can get it sort of accurate there. So anyway, support on 172.30 up here, top of group 1, you know that gives you the leg up. You just got to work out if you've got going to get 5 waves here, then you'll get another 5 over here. You just got to make sure that if that was the 5 waves in there and it failed from there, from the 72, and gave 3 waves back here, then you'd look for another 5 here, but that would still be 5, 3, 5 to here. So that support on top of that group 1 there is really critical in helping you discover if the market's going to move higher than that or fade from that. Alrighty, that's it. So pretty much like as yesterday, that US dollar index is quite key at 79.72 for a real change in trend.